Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective, and in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video till the end, and I will see you on the charts. In today's video, I want to speak about gold because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can see is that we have a market which at the moment is testing a very strong area of monthly demand and support. In fact, from here, this move to the downside was created confirming this area as monthly resistance. However, the market then broke above the level with this impulse, and at the moment the market is retesting that previous monthly resistance turn support, and from here we could expect the market to face some buying pressure. So what we could expect is to see the market create or at least try to create some rejections to the upside. Dropping down on the weekly time frame, what we can notice is that we have already seen one rejection to the upside when the market tested the level here. Once again, we had the move to the downside, retesting the level, and once again, the market rejected it to the upside. At the moment, we are inside of this support and demand once again. So we could expect, again, to see the market create some kind of rejections to the upside, or at least to see the market create and face some buying pressure, because we do have demand inside of this zone, as the market has already confirmed a few times in the past. If we go down on the daily time frame, what do we see? Now, from a daily perspective, we spoke about gold a few days ago. We spoke about the fact that the market was testing this resistance. And if the market would have managed to break above that resistance, then we could expect some bullish price action to get developed, as the market would have at that point created a double bottom. However, clearly the market did not break above this resistance. It clearly stopped here, close below the resistance, and until the market remains below a daily resistance, you can only expect rejections lower, which is in fact exactly what the market did. However, in creating this rejection to the downside, the market is also creating another interesting pattern, which is this daily M pattern. Now, in general, after the creation of an M pattern, what you would expect is for the market to create a rejection to the upside to go and complete the pattern at the previous support turned resistance. So here on the daily time frame, what we could expect is for the market to create a rejection to the upside to go and complete this M pattern at the neckline, which is this previous daily support now turned resistance. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data for gold, what we can see is that with the last reports, net positions have been growing. We went from having the lowest low that we had is 52k net positions. We're now sitting at 68k net positions. And we had with the last report, we did have shorts added. However, we have now started to see longs added as well, 1.9k longs getting added after a couple of reports where we were seeing thousands of longs getting closed. Now, what this usually indicates is that even though in the long term everything looks pretty bearish, you could expect from this level some rejections to the upside, because clearly there is buying pressure with institutions adding thousands of longs together with shorts, but still we're seeing thousands of longs. If everything was supposed to be immediately bearish, we would see only shorts getting added and longs getting closed. So in a situation like this, there is definitely the possibility to see the market find some support around this previous support area and once again get rejected to the upside, meaning that if this M pattern, since it has a completion zone exactly at this support, there's a good probability to see a potential rejection to the upside and completion of the pattern at the neckline, which is previous support and resistance. Before then, yes, the market can easily create more bearish continuation, but at least we would like to see the market create this potential completion of the M pattern. So how we could be approaching this move. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to the intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this M pattern at the neckline. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, there's all part of the mentorship program, which you can find at transparentfxtrading.com. Here you have the possibility to gain access to my entire course with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower, you will see that at the moment I'm running a special promotion in which, since I have partnered with the forex broker Blueberry Markets, if you join from the website and then open an account with them directly from your student dashboard, at that point you can get a full refund credited back into your trading account. And if you scroll lower, you will see that from here you can join and gain automatically access with the email and password that you will create during the checkout. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you, and I will see you in my next video.